Welcome back to Tip TV Mining, our guest portion of the Tip TV Mining show. And I'm joined by my co-host, Charlie Gibson. And our top performing fund manager is Ian Williams, who is also the Chief Executive Officer of Charteris Funds, and he is here to talk about the great performance of his fund, which has done about 200% year to date, which is more than most funds and certainly has outperformed most precious metals funds. So Ian, please let us know how you've done it. Well, we know it's mostly because you're in silver.
Yes. Yeah, I mean, basically, if you look at our fund and then you look at the competing funds that haven't gone up as much, our silver weighting is higher than theirs. Whereas very often the underlying shares that we buy aren't that dissimilar, really. But it's the heavier weighting towards silver that's responsible for the outperformance.
I think we got a slide that demonstrates that, doesn't it? And the extent of the outperformance. Now, you would put that all down to an asset allocation decision to be overweight in silver?
Yes,
right.
Mainly, yeah. I mean, there's a bit of stock selection in there as well, but mainly the key driver of that is the much heavier weighting in silver as opposed to gold. We don't buy exploration shares, we only buy the cash producing miners. We tend to buy the more blue chip ones. That's not why we're in the sort of small speculative sector of the market. We don't have leverage, we don't use derivatives. It's just purely a long only fund invested in 80% of the portfolio is invested in stocks with a market cap in excess of $500 million.
Right, and that's for liquidity considerations?
Yeah, basically, yeah. Well, we just don't want to fill up the fund full of small cap stocks anyway.
Sure. And do you take positions in the metals themselves?
No,
it's just
we can do. There's no point. I mean, the stocks are up, fivefold this year. And for every 10% the gold price has gone up, the shares have gone up five times that. So you wouldn't want to be in the metals at the moment because they're way underperforming the mining companies.
So when you were on our show previously, you were talking about the ratio between gold and silver and how you thought that the gap was going to close in. So that has actually occurred. Now, how much further do you think we have to go?
Well, what we think will happen is that not only as our fund outperform the others, but as we move on to the next stage, the rate of outperformance is going to get bigger. I mean, does
that mean you think that silver is going to go up? Is it going to narrow that gap with gold more? Or?
Oh, yeah, absolutely. No, I mean, you haven't really seen the full extent of silver's outperformance yet. I mean, if you took the fund performance from the bottom of the market and did what goes up most in a bull market, we're way at the top then. We're way above anything else by about 20% this year. But we think that rate, not only will the fund continue to outperform, but the rate of outperformance will get bigger.
Okay, so you're hoping that. Actually, it's interesting. That you're the top line on that chart. You've returned 200% in the year. Actually, even the bottom performing fund has performed over 100%. So I mean, it just shows you how good in terms of where you have your money in the market. To be in this part of the market is absolutely where you've wanted to have your money.
Yeah, I mean,
so what's the ratio? The gold silver ratio is now 65-ish.
65% silver, 35% gold mining. Yeah.
Yeah. Are you thinking of taking profits anywhere?
No.
No. What are your favourite stocks? What are your biggest positions? Can you tell us that?
Yeah, I mean, the biggest positions are in Fortuna Silver, Tahoe, Mag Silver, Fresnillo, which is a big UK FTSE 100 stock. That would be the top 4 or 5 holdings, yeah. And then we've got a few like First Majestic, Silver Wheaton, one or two. But of the top 10 holdings, I think we've only got 2 gold stocks in the top 10, the rest are silver stocks.
And so have you seen an increased inflow of money coming into your fund in the past quarter?
Oh yeah, I mean, it's coming in leaps and bounds now. But interestingly...
So how are you going to deploy that? Because
we just keep roughly the same weighting.
So you're topping up on your existing holdings,
yeah.
You're not looking to
No, we just
pick up any new holdings.
And interestingly, we've got a lot of people who, because it's gone up so much, a lot of people are interested. It's attracted a lot of interest. But the common kickback we get at the moment is, well, we can't buy your fund because it's gone up too much. I can't possibly buy something that's gone up 200% in 6 months. Because this is actual, it's not annualised. This 200% isn't an annualised performance. This is actual. This is actually what it's gone up. And people are saying, so
What's actually what? And that's in sterling, 200%.
That's in sterling.
Right.
Yes.
Okay.
And so we were talking about Santa Cruz silver today because it was in the news. Is that one of your holdings?
No.
No. Oh, okay, that's interesting.
Might it be?
I thought it was.
No, we haven't.
It's just
got
one
that
you keep an eye on, but you must be keeping an eye on it.
Yeah, we're having a look at that one. Yeah, it's on our watch list, but it's not actually in the fund.
Okay, and so you have a chart on the volatility of the
Yes,
gold
okay.
and
Yeah, well, this is underlines the point. You see, if you look at this bull market here, what normally happens is gold starts the game off, and gold starts going up. So during this period here where gold was going up, silver was actually going down a bit, and then they start going up, and then at some stage, as the bull market unfolds, silver absolutely goes into overdrive and goes up way more, but it doesn't start from day one. It takes a while to get going. So that's why we're saying that there's increased silver weight in most of the outperformance we haven't yet seen. Because although silver's gone up a bit more than gold, it hasn't gone up anything like that sort of percentage over gold.
Why do you think that is?
Well,
Is it because people think in terms of gold first, and then gold goes up and they start thinking, what else is there around? I know silver, and that's why silver gets a sort of second.
Silver's $20 an ounce, and gold is $13.50 an ounce. It's a lot easier for silver to go from 20 to 40 than it is for gold to go from 1,300 to 2,700 or something.
and the average net worth of the entire population of the whole world is quite low. So
Yeah, and so you could get, say, a farmer in India or Philippines or something might not be able to afford a gold coin, but they can certainly afford a silver coin. And also, see the day traders as well, the futures and CFD traders, you can get a much bigger position in silver for your margin money than you can in gold, you see. So they're much lower price. I mean, the beta volatility...
Is it then that you have the rich Western world that is initially investing in gold, and then you get the rest of the world catching up and investing in silver afterwards, or is?
I mean, no, because silver has a higher volatility in bull and bear markets.
Mm-hmm.
And look, if you look at it from what's come down, gold's hardly come down at all, really, compared to a lot of other commodities. Gold's come from $1,900 down to $1,100 and is now bounced to $1,300. Silver came down from $50 an ounce down to under $14 a year. So silver's come down much more. It comes down more in a bear market. It goes up more in a bull market. Always has done. And if it continues to do that, that's why we're saying that the rate of our fund, the rate of outperformance is just going to get bigger as this, because we haven't seen the most of this silver move over gold yet.
So I was talking to Zach last week, and we were talking about gold, silver, and one of the things he said, he thought the silver actually was treated more by investors as a store of value than gold was, whereas gold he said he thought was described more, or thought of more in terms as a currency. So you're looking at interest rates and those sort of macroeconomic data. So still, a store of value in its own right, but he was saying he thought silver as a pure metal was conceived of by investors more as a store of value, if you like, it's almost independently of the interest rate arguments. Would you agree with that, or
sort of? But there's other points as well. For example, silver is more industrial use than gold, and silver is, if you look at a supply-demand balance at the moment, it's a billion-ounce market, billion-ounce supply, billion-ounce demand. More silver gets produced as a byproduct of lead and zinc mining than comes out of primary silver mines. So what we saw last year was that Glencore's and Anglo-Americans were closing down lead and zinc mines, which is going to take quite a bit of silver off the market. And the market's already in balance. It's not like iron ore where there's a great big glut around. It's going to be for the next couple of years. On the demand side, if you go back to, say, 2005, of the billion ounces of total market, 10 million ounces went into solar panels. Last year it was 60, 70. The forecast I've seen on industrial is going to go up to 150, 200 million ounces just to make solar panels, because you can't make, for every solar panel, you need 2/3 of an ounce of silver, and you can't substitute it for anything else.
I mean, it is remarkable how silver's changed in that respect, isn't it? Because if you went back 20 years ago, it was jewellery and black and white, and it wasn't just any old photography, it was black and white photography.
well, they've also found a new use for silver in that they found that nano touch screens
Yes.
on your that they've used nanoparticles of silver, and they find that it's cheaper and it's better. than what they're currently
And
using.
then you have the microbial, which you'll know all about, obviously, you know, the antibacterial
Yes,
qualities
that's
of
been
silver.
around for a long time. So we look at your last chart.
Right, and the other, sorry, just one before you go, sorry.
Yeah.
The other big difference between silver and gold is that all the central banks everywhere have got loads of gold sitting in their vaults. There's big stockpiles of gold everywhere. So if the gold price suddenly shot up, it's not inconceivable that a central bank of whoever could dump you know, quite a bit of gold onto the market.
There are
No one-
stockpiles of silver, though, aren't there?
Well, are there? Where? I mean, where are they?
Well, I think they're in the Far East, aren't they? Or there were. Well, it's always assumed that we'd know that there were stockpiles. We don't know if there are anymore, and if there are, how big they are. But do you have a feeling for that, or you know whether maybe those stockpiles? Or
I think you can say with 100% certainty that there's stockpiles of gold around.
right? Yeah, absolutely. Yeah, no.
No one's going to argue that. Whether there's stockpiles of silver around, I don't think anyone really knows. But I would guess that if there were stockpiles around, they're not very big, and they've come down quite a bit, and maybe there's not even stockpiles at all. But you know, and the other supply of the metal is, and again, it impacts on the lower price per ounce. When you've seen gold spike up in the past, you've seen queues of private investors melting down jewellery, you know, to get the money back. Silver at $20 an ounce, it's just not worth it. You know,
Yes.
silver's got to go to 50, 60, 70 before Auntie Maud's going to get a walk down to the sort of shop and trade in her silver candlesticks or something.
Or
It's just
her
not
tea
worth
set.
Well,
So does that mean you buy? Yeah. Do you buy your girlfriend gold or silver jewellery?
It depends how much you like it. I suppose.
Well,
Depends how much
it
you wanna
depends on
spend.
how much your net worth is.
Right. And how much you?
Or how many girlfriends you have, Charlie, that you need to buy for.
So, okay. So there's quite a few things going for silver. That I'm not saying they're not going for gold as well, but they're going more for silver than for gold. So the whole thing seems to me in quite a sweet spot. At the moment.
And so what is this chart showing us?
This is the 40-year average of the seasonal pattern of silver. So basically, one of the remarkable things is that most of the outperformance in silver and in gold as well tends to come in the second half of the year, from sort of middle of August onwards.
So that means this is a good time to buy your
Yeah, I
fund.
mean, so
This is Diwali, Christmas, Chinese New
exactly,
Year.
Yeah, you've got all three bunched together, so it sort of distorts the demand seasonally into the second half of the year. But the amazing thing is that this year, not just our fund, but all the funds have gone up in what's seasonally the weakest period of the year. So this fund's gone up 200% in the weakest period of the year. It's not like it's gone up in the strongest part of the year. And once we get through over the next 3 or 4 weeks, and we get, you know, if we get this little maybe sell-off in August that you sometimes see, September and October are very often the strongest months of the year for gold and silver.
So can we put you on the spot and say where you think your year-end prices will be for gold and silver?
I would think gold could easily hit $1,500 an ounce without too much effort, to be honest. And I think silver could go from 20 to 30.
Wow. And on that note, thank you very much for joining us, Ian, and thank you very much, Charlie. And if you please go to Ian's website, Charteris Funds, you can have a look at all of the information and possibly contact him with any questions that you have. Thank you very much for joining us. And if you'd like to be a guest on TIP TV, please contact us. Thank you for joining us, and see you next week.